it looks like, just because the simple fact that ES is closer to its daily highs here, these multiple session highs Thursday and Friday, opposed to its Friday low and Thursday low, it looks like ES is going to want to get these highs first, right? And if that does occur, I will be monitoring a reversal back down into the range. Okay, guys, so welcome back to another video. In the clip you just saw, that was a little snippet from the weekly outlook that we had this week in our Discord, and kind of potential scenarios and some expectations for this week, but even Monday's session that I held looking at the charts. So getting right into it, this right here is a 5-minute chart. The clip that you saw to start today's video was the 1-hour chart, okay? But we're still just focusing on first Friday's high and Thursday's high. Now, why is that significant? Because those are session highs in close proximity. So how am I looking at those session highs? Engineered buy-side liquidity. Okay, how is that useful for me as a trader, for my narrative, for how I'm looking at price? If I want to target those liquidity pools, I just wait for the long setup, understanding that price is going to want to gravitate towards those relative equal session highs, that engineered buy-side liquidity. And or if I'd rather wait for the short setup, I can wait for that manipulation to take place and for those two liquidity pools to be taken out. And then all I am waiting for is a reversal in the opposing direction, or in other words, back down to sell side liquidity to short. So I want to paint the picture and really put together the pieces of the puzzle to build your narrative, understanding manipulation, understanding engineered liquidity, and try to keep it as simple as possible. And then all we're doing, just like all the other videos, just like all the other calls in Discord, just like all the other charts you guys see me post, I'm utilizing the same signatures on the lower time frame or the 1-minute chart to get involved every single day. I'm using the higher time frame to build a narrative, to try to identify things like engineered liquidity, which we are going to discuss here, like key time levels, session highs, session lows, etc., etc. So again, the clip to start this video, we saw Friday's high and Thursday's high in close proximity to each other here on ES. Now, I have this pause back and replay right before 9:30 open just to see where we are, because that's when I begin my trading after 9:30 open. We see, if I bring this to the right here, we see Friday's high is purged before 9:30 open. But what is London high doing? It's falling just short of last Thursday's high. So yes, we purged one of the buy-side liquidity pools, but I'm still looking at this as still two session highs. London high, just short of last Thursday's high. And just like last Friday and last Thursday's high, I'm using the same logic there. So all I'm waiting for is to see if those get ran and I get a reversal on the lower time frame or the 1-minute chart to target the opposing direction. And simply put, being able to identify engineered liquidity is such a useful skill, because after you can do that, all you have to do is wait for that engineered liquidity to be taken out and see if you get a reversal signature. Okay, now just because we have relative equal highs here, does that mean I just short it every time? No, we still have to look at the opposing side of the range and build our narrative and say, okay, there are clear sell side liquidity pools that would make sense for price to gravitate down towards and to take out, or in other words, to target, right? So 9:30 open, what do we have on the left side of the curve? Well, what are we above? Sunday's opening price, midnight's opening price, and as we'll see on the lower time frames, we're also above 9:30 opening price. And all of those things are ideal as a simple framework for where you want to hunt your short setups, above those key time levels. Okay, and then even getting down to it, you guys know macro power of 3, you can refine that same logic down to macro opening price. You want to see the best short setups come above macro opening price. But you see already, just looking at this 5-minute chart, price is above Sunday open, price is above midnight open. And what do we have on top of that? We have low right here, falling just short of Sunday's open, but look right where my cursor is here. We have London low right here, formed at 250 this morning. And if we drag that out to the left, we see that those are equal lows. Okay, so we know that session lows in and of itself are great things to target, and you can expect price to go to those session liquidity pools. But when you see them have equal lows or relative equal lows, it's higher confluence that price is going to deliver there. And on top of this, note where London's equal lows are residing, right below Sunday opening price. So the manipulation is taking place above Sunday open, above midnight open, above 9:30 open, as we will see, and it's going to distribute back down below those key time levels to these engineered sell side liquidity pools. So beyond London equal lows, what do we have? Engineered sell side liquidity. Why am I internalizing this that way? Because just like Sunday opening price here, that liquidity pool is just below midnight's opening price. So what am I discussing here? I'm waiting for the manipulation, and I have my narrative built saying, okay, there's clear as day engineered sell side liquidity pools. All I have to do is wait to see if I get the setup on the lower time frame. Okay, and if we zoom out for runners or just to see what's the other target, yes, we have this that was formed last night, Sunday, August 25th, okay, after Sunday's open for the week, and this here, which was formed last Friday in the PM. But I really like to rely on session lows for most of my targeting, and the next session low would be previous day PM session low. Okay, so look at this 5-minute chart still. If I zoom in here, the last 5-minute swing low at 1:55 p.m. Eastern time from last Friday, August 23rd, relative equal low here. Okay, it's just more of a reason for price to want to gravitate lower after the manipulation has occurred. Okay, so before we go down to the 1-minute charts, I do want to look at the daily chart. And if you recall from the weekly outlook video, guys, this was the daily SIBI that we were watching. Okay, this is from July 17th's daily candle, and we have the daily SIBI low, the daily SIBI high, and this important level running across your screen right here. What is that? That is CE, which stands for consequent encroachment, or in other words, 50% of this daily SIBI. That is a key reference point, and that is important for us. That is an important and extremely key level for us to monitor, especially on top of the things we have already discussed and the narrative that we have already built. Okay, so when we go to the 1-minute chart, we're going to want to study what price did in relation to this daily key reference point down on the 1 minute. So let's do that now. And we have a bunch of lipstick on this chart, so we're going to walk through it here. Okay, if we zoom in, we see that price, as we mentioned, is above 9:30 open. That's what we see on top of the fact it's above Sunday and midnight open already. Okay, I have labeled here London's high and our last Friday high. So our engineered buy side liquidity pools. What do you want to see before you get your short set up? You want to see that manipulation occur above these key time levels, okay, and above those engineered buy side liquidity pools. That occurs. So I'm going to delete this here just to clean it up as much as we can. And what do we run into? 9:30 open, we expand higher, knock out those buy side liquidity pools, and look what price is running into here. This is that daily SIBI 50% level, right? On a 1-minute chart, the bodies are respecting this. As my cursor is hovering over this candle, look at the top leftish portion of the screen. You can see that this candle's closing at 5668.5. The bodies tell the story. This daily CBC level is exactly that, 5668.5. So this is why these key levels are important. Now, will it always be this clean and precise to the tick? No, but when it is and it fits the narrative that you have built, it is extremely useful and important to at least even monitor those levels, because when you do see exact signatures like this, it's beautiful. Okay, so after that occurs, do we want to see best case for a short us really expand higher above CE of that daily SIBI? No, because going back to the daily chart, this is still showing you it's failing to reach for the high, which is a signature of weakness, which we discuss all the time on this channel and in Discord. Okay, after we see the respect from that key reference point up here from the daily chart, we have our 930 fair value gap. Okay, now what does price do? It gets below it, and does it reclaim here? Yes, right? Why did it do this? Why did it come back up? I don't know, right? Do I need to know? No, I don't. But what I do know, and what we discussed not only in relation to the 930 fair value gap, but other significant inefficiencies like a high probability inversion, a macro BPR, a high probability order block, everything that we know is important to monitor on these lower time frames. If we do close below, lose it, and then we do reclaim it, then no ifs, ands, or buts. We want to see the signatures that we demand and require in relation to these significant inefficiencies. So what do I mean by that? Price closed below the 930 fair value gap, this 1 minute BISI formed at 932, and then right away it recovered it, right? Is that ideal? No, but what do we see again? The body's respecting CE of that daily SIBI. And then we do see us get back down below the 930 fair value gap. So now after we've closed below it for the second time, this is what I mean by you want to see the signatures of weakness in this case, since we're framing a short setup and short delivery. You want to see the signatures of weakness start to show you that you are correct about that potential scenario. So price closes below, engineers all this liquidity, and returns to the 930 fair value gap. Now, before we continue and discuss how we got down here, on top of what we already talked about on the higher time frames in identifying the engineered liquidity, right? London equal lows below Sunday open, zooming down, previous day PM session low, right? The fact that we're above these key opening time levels. In Discord all the time, we say what? We want to identify where the manipulation could occur, and while that manipulation is occurring, you want to see as much engineered sell side liquidity get left before your setup is presented. So what do I mean by that? This 1 minute liquidity pool here. So we have this swing low at 904, but right at 930, look what we're doing. Coming down here. Are we purging that? No. We're building liquidity on top of everything we already discussed on the higher time frames. We have these equal lows right here falling short of everything we already discussed on the time frame. We have this swing low falling short of Sunday opening price and the London equal lows, which is our draw on liquidity. Okay, so again, it's all about stacking Confluence and building your narrative. We have so many reasons to expect price to go lower. We just have to hunt the setups and identify signatures of weakness. Okay, so try to flip your logic here. When price came back above and closed above the 930 fair value gap and reclaimed it, if we were in fact bullish, you would want to see us tap into this and take off. Is that what we did? No, we came right back down below it. Okay, we enter the 950 macro, and what does price do? It goes above macro opening price, purges a swing high, and starts to expand lower. And after the delivery that already occurred in relation to the 930 fair value gap, you really don't want to see us spend too much time back within it. Now, why do I say that? I already mentioned here, since we closed back below it twice, you don't want to see us spend a lot of time in this. You want to see the signatures of weakness. So what's a signature of weakness? Of course, failing to close above it in its totality, failing to reach CE, which if I put that line in my chart, look at what it's doing. It can't even reach there. And look at the bodies here. Yes, it reached into the lower portion, the lower half of that 930 fair value gap, okay? But the bodies can't even close at the low of it or within the 930 fair value gap. So the bodies tell the story. You're seeing the signatures of weakness, okay? On top of that, you want to see those signatures hold true. So as we enter this macro, could we have returned to this 930 fair value gap and then sold off? Yes, of course. But best case, if you're just internalizing this order flow, you want to see us fail to reach up there because it's the algorithm showing you that the market is weak. And what do we see it do? After the manipulation has taken place into a higher time frame key reference point and price is showing you it's closing back below these lower time frame significant inefficiencies, okay, in today's case it is the 930 fair value gap, we see price attack our engineered sell side liquidity pools, okay? And where are we distributing? Back down below 930 opening price, back down below Sunday opening price, back down below midnight opening price, down to previous day PM session low. Okay, so the takeaways from this video are, if you see session highs in close proximity to each other, you can play the long in this case like we had today up to those relative session highs and understand that you're playing the manipulation leg. So if you are correct and you do get your target hit to those session highs, you do want to be careful and take your partials there and make sure you're managing your risk accordingly, just in case we do reverse like we had in a scenario like today, okay? But if you can identify key levels, key opening prices, relative equal lows, session lows, and stack your Confluence as much as you can, all you have to do is wait for the manipulation and wait for the lower time frame signatures to execute on your setup. So I'll be posting some more charts of this within Discord. If you guys enjoyed this video or have any questions, let me know in the comments or just give me a ping within the Discord community. I'd be happy to get back to you, and I will talk with everyone soon.